Hello guys and welcome to my channel. If today is your first time coming across this channel, kindly do me the favor to subscribe. Hit the notification bell so that anytime I post content like this, you'll be among the first to get notified. Today we're going to be talking about the major concepts which every trader in the forex market need to understand before you can definitely start the journey smoothly. That means before you can be profitable, and which is the what market structure. So market structure is one of the major concepts in the forex market which every new trader must understand and how to know how to apply it on their day-to-day trading activity for them to be profitable. But before I proceed with the um, lecture, should in case you are still battling with forex trading or synthetic trading, that means if you are still not making profit consistently as a trader in the forex market or in the synthetic indices market, which is on deriv, probably you need a mentorship or you need somebody to help you teach you the necessary way to become profitable. Then you can definitely chat me up on my WhatsApp number, or you check the video, the description of this video. You will also see my WhatsApp number there. We can then talk where I'll have access to teach you, explain to you, and also provide you with some software as a beginner for you to understand and grab how this forex market really work. Because uh, most of you who are out there are using your mobile indicator, and your mobile indicator is not enough for you to be profitable. Is that clear, guys? All right. Thanks for watching, and please make sure you don't skip any video, any part of this video, so that you'll be able to digest this information from the beginning till the end. Now, the first question is, what is market structure? Market structure in forex trading refers to how the price moves in pattern over time. It shows the direction of the market and helps traders understand whether the market is in an uptrend, downtrend, or moving sideways. Now, in the forex market, price moves in three directions. So, this direction that price moves will determine if you are going to be making entry or not. Because market structure is just like the foundation of any strategy you are using in the forex market. Any kind of strategy you must use or you want to learn how to use, then the basic way for that strategy to be effective is understanding the structure of the market first. If you don't understand the market structure and you are buying different kind of courses on a particular strategy, believe me, the person who sold those strategy to you might be making profit, but you that paid for the strategy, you won't be making profit. The reason is not far-fetched because you who bought the strategy, you are still having a problem with the basic knowledge of market structure, right? You are still having problem. You have still not understand how to understand or how to determine or read the market structure. So even if the strategy is effective, since you don't understand that concept, it will be very difficult for you to make profit with it because you might be taking your own entry at the wrong time. Is that clear? So the three ways which market moves in the forex market on your chart are in the uptrend, downtrend, and sideways. Now let's continue with the explanation. Here are the key components. The first one is the uptrend. In an uptrend, price tend to create higher highs and higher lows, showing the price is going up. Before we move to chart, we have some paperwork that we explain that. Now this is an example of an uptrend. This is how an uptrend looks like, right? Though it might not be as smooth as this or clean as this in your chart, but this is just giving you an idea what an uptrend looks like. When we get to your chart, or we are talking about the complex part of the market structure, then you'll be able to start digesting it in a full. You'll be able to digest the information properly. So in an uptrend, we are told that price tend to create higher highs. When they say higher highs, is this. Now this is a price moving from point A to point B, right? Now, okay, sorry. This is price moving from point A to point B at first. The first movement we usually refer to as an impulsive move. That means it moves with an impulse. If there's momentum, there will be a pressure of price moving towards that direction, which is the upside. Now, the base here is referred to as low. That means the starting point when that price started to push from, we refer to that point as the low. Now, price doesn't move straight. It will move an impulsive movement, then make a correctional phase. In this correctional phase, some people refer to it as a pullback. Some people refer to that phase as pullback. Now, when price gives you an impulsive move, the next move, which is going to be, is an impulsive, a correctional phase or a pullback, which is what we are going to have here. So the point price start dropping from this area, we refer to this place as the what? As the high. Being the fact that price is going to be making higher highs, the next thing you are going to notice is that price will what? Break this high, this point here, right? Because price is in an uptrend, price is going to what? Break above it. That is why they said price keeps making higher high. Now after creating another impulsive move, the next thing you will see price doing is what? Pullback. When it pull back, it what? Breaks again, creating another impulsive move. So whenever you open your chart and you notice this kind of move, it is referred to as an uptrend. What you are going to be seeing is price will just making all its ways to the top, breaking the previous high. This was the first part or the first high we had. Price made a pullback and then what? Break above it. That means it went above that point. Now it get to this point, which we refer to as another high, right? Because this current high is higher than the previous one. So that is why they say price makes higher high in an uptrend. Then it also makes higher lows because this current low is higher than the previous low. Why this low is also higher than the base where it started from. So the characteristic or an attribute of an uptrend is that it creates higher high and higher lows. Is that clear? Because price is what? In an uptrend. Now the second trend, which is the downtrend, is just an opposite of the uptrend, right? It's just an opposite of the uptrend. So in the downtrend, price tend to create higher lows, lower highs and lower lows. Price tend to create lower highs and lower low. Now, price in this case, price is not coming from the base, rather price is coming from the top. Price is dropping from the top. After an impulsive move towards the downside, we refer to this point as the what? As the high, because it is coming from the upside. Now, the next thing you will notice that price is going to make a pullback just the same way we had in the uptrend at some point. This pullback can be due to some factors which you are going to be learning later as this class proceeds. So, price will make pullback, which we call the correction phase, after an impulsive move. Then the next thing, price will tend to what? Break this low because this point price got to before making that pullback will be referred to as what? A low, right? It will be referred to as a low. Then this upper part is referred to as the high. So when price creates a low and may pull back, the next thing we'll be expecting is for price to come and break below that low. So immediately it breaks below this low here, it creates another new low. Then what you expect next again, or what we expect to see, price will what? Make correctional freeze or pull back a bit, making this point a low also. So for them to say, or for the definition to say, price keeps making lower high and lower low. Now, this point here was the high prices started from. So this low here, or this current low here, before this recent one, was lower than the first one, right? So it creates lower high. That means it's just like you descending from a step, like I explained in one of my video, you coming down from a step. It'll be coming from the up to the down. So this point was high, but this point was a bit lower than this point. Now this point is what is going to be higher than this current point, while this point is going to be lower than the previous point. So that is why they say price tend to make lower highs in a downtrend because it's descending, then makes lower low. This was a low at first. Price made a pullback, break that low, and created another new low here. So if price should break this low now, it will also create another new low for the next uh, range. Just like what we have now. Price has taken out this low, creating another new low. So this is the attributes or characteristics of a downtrend. Downtrends tend to create lower high and lower low, while uptrend tend to create higher highs and higher lows because price is moving towards the upside. So these are the two major trends in forex market. The third one, which is referred to as the consolidation, is neither an uptrend nor a downtrend. Now, the price moves between a support and resistance level without a clear direction. That is in a range market or in a consolidating market. Price doesn't move up, neither does it move down. It's just going to be sideways. It will be going what? Sideways. It will not create higher highs, neither is it going to create higher lows. Don't worry, I'm going to take you to the chart, then I'm going to show you how these things appears on the chart. So as a new trader, you should be able to identify when price is making higher highs and when price is making when price is an uptrend or when price is in a downtrend or if price is ranging at any point. So in a ranging market, what you notice is price is just in between a particular zone, right? And the top of the zone, which price didn't break above, is usually referred to as a resistance area or a resistance point. It's just like you staying in your house or in your room or your parlor. When you jump, your head touches the ceiling, and when you come down, your leg comes down to the floor. So you are not breaking above the ceiling, and you are not going below the floor. So that is just example of what price is doing. Price will move up to a particular high. Next thing, it will drop back. It will be moving within a range, right? Within a range. So the top of that point where price couldn't break above is usually referred to as a resistance area where price cannot break through easily. Then the floor or the support zone is referred to as support. That is where price is standing on. Is that clear? Where price is standing on and couldn't go below is referred to as support because it can't break below that area. When it breaks below the support, it gets to another new support. And when price breaks above the resistance, it gets to another resistance. So in a nutshell, in a ranging market, price tend to stay within a zone moving sideways. This time, price doesn't create higher high, neither does it create lower low. All we can see is equal highs and equal lows, right? When you not open your chart and you notice price are just moving sideways, when you observe it for a very long time, you notice that it is just giving you equal highs and equal low. So in a such case, traders are not even advised to trade it. Is that clear? Basically, when you are new, you are advised to keep off, wait until price break either from the top or from the bottom, and let it give you some confirmation that is ready to either move up or down before you take entry. But in a situation whereby the price is moving sideways, it is usually safe to keep off or stay off from that particular pair or that market as it may be. Now, understanding market structure helps traders make better decisions by identifying trend, reversal, and key level for trading opportunity. That means when you understand market structure, it helps you it helps you as a trader to make better decision. Just like what we have in this last point. When you understand a ranging market, it will be unwise for you to start gambling with your money at this point because you know that if you should take buy here, there's possibility that this price will not get to your expected resistance zone. Price can just turn at any point, then breaks below. At that point, you lose. And if you sell from here, expecting price to come down, just because of we have been having series of that kind of move, there's possibility that price may not get down here. It may just reverse and break above, and then end up putting you in a loss. So, but when you understand this market structure as a new trader, then you keep up from a situation like this. Then, if it is in an uptrend, you know when to wait before you take your entry. There are things you will be expecting to see before you join the trend, or probably you'll be waiting for the trend to make a reversal before you join. So it is very important that as a new trader, you understand this market structure. Otherwise, whatever you are doing in the market, without this concept in your mind or having idea or knowledge about this particular concept, it is more or less like you are gambling with your money. So that is why till date, you after going through so many videos online, watching or going through many articles, going through many books, you still discover that you are not profitable. The major problem is probably you don't understand your market structure, because if you should understand the market structure, then any error that comes up after that, you'll be able to easily handle it. But when you don't understand your market structure, it will be very difficult for you to make money. Now, aside the fact that many traders out there are greedy, most of them are still yet to understand this concept. Some of them are all busy watching YouTube videos just like you are watching now, but to apply that information they get becomes very difficult due to some other factors. So it is usually safe or better to have somebody to mentor you, tell you this is what you should expect, this is what you should do at a point in time if you want to be profitable. Is that clear? So if you are still having that same problem as a new trader or an old trader who have been trading for long but you are not profitable and you can't even figure out where the problem is coming at, I suggest you join the mentorship class because it's going to help you enough. This time around, you are not the only one. You'll be able to communicate with somebody. This is what I want to do. If I enter this particular pair here, is it safe? If it's not going to be safe, then you get reason. So this is how you'll be able to start developing knowledge or gaining information on how you should approach the forex market. That being said, let's get to the second part, which is called POS. Market structure is the general concept, but we can't just talk about uptrend, downtrend, and say we understand market structure. No, we still need to go deeper by displaying by explaining what BOS means. That means break of structure. Break of structure. When we say market structure, we're talking about the direction or the pattern at which price is moving. But when we say break of structure, we are not talking about when price probably change from a particular trend to another trend, or when price is trying to continue with the trend. So BOS, which is break of market structure, can be understood in two ways. So for you to understand the concept very well, you have to understand that BOS can be understood or can be defined in two ways. The first one is trend continuation. BOS trend continuation. A break of structure occurs when the market moves beyond a previous high during an uptrend or falls below a prior low in a downtrend. What this definition is giving is that when we say BOS, now this price was moving up at some point, right? Made a pullback. Price was moving up bullish at some point, then made a pullback, which is the correctional phase. Here becomes your high, and here becomes your low, right? For the fact that the price is going to be going up, immediately price breaks above this high before the pullback, then we say price is what? Moving high. Then this is the point we now have a break of structure, right? This is a break of structure, BOS. That is in a bullish pattern, right? Now, the major thing I want you to understand here that in trend continuation, we are not expecting to see an opposite BOS. If the price is going to be bullish, all we want to be seeing is BOS to the upside, not BOS to another side. And if the price is dropping, all we want to be seeing is BOS to the downside, not BOS to the upside. Is that clear? So if this trend will continue moving towards the upside, we expect price to make pull back a bit and then this current high will also be taken out. So you can see that we are still maintaining that sequence, having BOS all the way to the upside. Price makes another pullback at some point, then it breaks above again. The next thing we are going to still have is a BOS towards the upside when price break the previous high. And this is the current high now. If price should make a pullback, then breaks above it again, we keep having BOS to the upside. This is a bullish continual trend BOS. Bullish continual trend because the BOS is price is what the BOS is towards the upside. And in the case of downside, what we have is price from coming down from the high, make a pullback, and the next thing we have is price breaks towards the downside, right? Then make another or pullback, price continue breaking towards the downside. Make pullback, price break towards the downside. Make pullback, price break towards the downside. So in a continuation BOS, we want to see POS, the break of structure, in the same direction, right? In the same direction, not in an opposite direction. So when you keep having BOS, the first one in the same direction, second one in the same direction, it is an indication that price is what? Moving towards the upside. Then if it is in a downtrend, and you notice the first BOS was towards the downside, the second one was towards the downside, then it is an information that this is a continuation BOS. This is when traders will now decide, okay, since I have the first BOS towards the upside, the second BOS towards the upside, now it now triggers your attention. Where is price going with this break of structure towards the upside? This is when you start trying to make little analysis either from the higher time frame to see probably maybe an area of interest where price is heading to, or a support zone or a resistance zone where price is going to. So you will be waiting for it to make a kind of pullback. Then when it make that pullback, you take your entry. Let's say for instance, you are a trend trader, right? You are a trend trader. That means people who love trading with the trend line. Now you notice a price giving you higher highs. The first move gave you that impulsive move, made a pullback, breaks above the high, right? Price creates a BOS and break above the previous high. Then the next thing, price made another pullback a bit, then did what? Break above the previous high again. So now as a trend trader, this gives you it draws your attention to the chart. Then you said, okay, since this price is giving me BOS towards the upside, which is a continual trend, now let me see if I can join this trend. So you now place your trend line like this, connecting the two swing points, right? Connecting the two swing points. So the intention is if this price is going to go bullish, or just based on the information you are getting, you are expecting price to drop down to this point. Immediately price drop down to the trend line which you have uh, placed on your chart using as gauge, then at this point you place your what? You place your buy entry because this is a bullish market. Then when you place your buy, you put your stop loss at this swing low somewhere here, at that swing low, because your expectation is price may not get there, price may tend to keep going up. And what do you do next? So the price will not, since the price is bullish, it will what? Move up, putting you on profit, create a break of structure, then make another pullback towards the trend line. And what do you see again? Price keeps going this way. So with the help of BOS, you can decide to you can easily understand if the price is in a continuational phase or if it is in a reversal phase. But currently we are talking about the continuational trend BOS, the continuation BOS, the continuation BOS. Because if it's in an uptrend, price will keep giving you BOS towards the upside. Then if it is in a downtrend, like I said earlier on, let's say for instance you notice price gives you a massive impulse drop, made a pullback at first, broke the structure, creating a BOS, right? Then all you keep doing is watching, and again price went, made a pullback, then create another BOS. Now this will also draw your attention. Okay, it's as if price tend to be making lower lows. So this there's possibility that price is what? Dropping. So let me take this advantage and make little profit from it. What you do as a trend trader, you place your what? You place your trend, connecting the two swing points all the way down. So what you want to see next is just what happened in the bullish trend. So you want to see price make reversal to this trend as which you have used as your what? Your gauge. Now when price comes there, you place your sell order, then your stop loss will be at this swing high. That is where you put your stop loss at this swing high, few pips above it, and probably since the price is going to continue, what you are going to see next is price will what? Break, putting you in profit, break that structure because price is in a what? In a continuation trend which is towards the downside. Then this same situation or this same process keep repeating itself time down. So now you can see the advantage of having the knowledge what market structure is and how you can identify a continuation trend POS and the reversal trend POS. So all we've just explained now, all I just explained now is on the trend continuation POS. Exactly. This indicates the continuation of the current trend, signaling that the momentum remains aligned with the prevailing direction. So as we have been having the 4 point now, you notice that price was just busy what buying and buying in the bullish trend because it's continued, and in the sell case, you notice price is dropping and dropping. So continuation trend will give you continuation BOS will give a trader an insight that the price is moving up in a bullish scenario and moving down in a bearish scenario. So with that, they will be able to make decision to take advantage of the trend. That means to place their entries based on the direction of that trend because they have been having sequence of BOS towards that direction. So now we move to, let me show you some examples just like I've explained, then we proceed. Now you can see just like what we have the first BOS towards the upside, second BOS towards the upside. There's possibility that the BOS will continue. That was why I draw a trend line initially, telling you that what those who love taking trend line using trend line. Now the expectation will be okay. Price will make pullback to this trend line. Their stop loss is at the swing low. Then they're expecting to see price go bullish and breaking structure again. Exactly in a continuation trend because there was an information that price has been doing buy and buy. That means breaking price towards the upside. Then if it is in the downside, we have the first and the second BOS. So as a trader who use trend line, your expectation will be okay. If this price should come back to this zone, since we have been having sequence of that pattern, if price should come back to this zone, I'll definitely do what? Make a sell or place a short order for price to go down so that you also make profit from there. So this is in a continuation trend, right? Now we have we have something similar to the chart here. So you can see just exactly what we explained. You can see price has been breaking structure towards the upside. So this is a good example of a continuation trend in a bullish sequence or bullish pattern. Why this one at the other end is a break of structure, continuation break of structure towards the downside. Is that clear? So we can still also place our trend line connecting the swing point and waiting for price to make pullback to that point, and when it come, we push price towards the downside. Why our take profit is a little bit above the swing high. You can see that if you don't understand market structure as a new trader, it will be very difficult for you to know when the trend is continuing, where to put your take profit and stop loss. But immediately you have this in-depth knowledge of what market structure is and understanding that market structure, break of structure can only occur in two ways, which is in a continuation pattern and a reversal pattern. It will also give you that edge to be able to make decision, right? To give you uh that confidence that okay, since this is the pattern this price is giving me based on the trend, either bullish or bearish, I'll be patiently waiting for price to ascertain to some certain level which is the pullback or the correction phase before I also join this trend. So some of you who don't have this knowledge, because you see price moving towards the upside, right? Because you just notice that price is moving towards the upside, you might be taking your entry when price want to make pullback. And if the pullback is going to go deep, or probably you don't have enough equity, or you have used a huge lot size because out of greed, you have placed orders based on huge lot size. For the price to be making a correctional phase, you now become a victim, right? You become what? A victim. You place your entry unknowingly at this point where price was about reversing, right? And you just have little equity. Let's say you have $10, but you are eager to grow that $10 into $1,000 in the next 10 minutes. And you open so many positions, having that belief that the price will continue all the way up because you didn't know when to enter and when to join the trend. You just out of nowhere open so many positions. This pullback that the price is making now will now take you out because you don't have enough equity. All you just see is that your account will start reading 0.00, and after a few minutes, you will now see price moving towards the upside. And this gets you worried and make you even hate the forex market the more because it will now look as if you are being monitored. Nobody's monitoring you. It is you that made that mistake because you don't have that in-depth information that when price is making higher highs, you have to wait for price to give you you have to do your analysis based on your strategy. When price get to your area of interest, then you place your entry. Just like for somebody who is using trend line, right? When price, since he has marked out, wait, okay, price make the pullback again after creating BOS, then went above. So as a trend line trader, you must have used your what? Your trend line because this is your own way of identifying area of interest because your area of interest now is price touching this trend line and I'm executing my trade. But you that just open trade initially based on guesswork or based on your emotion, now price take you out. But somebody who uses trend line already knows that this price that is moving towards the upside will not just continue like that. So I'm waiting for when it what come back to my area of interest, which is the trend line, before I execute my trade. Then when price come, he or she will gladly execute his trade. And then he has already know where his stop loss will be, and he already know the risk to reward he's going to be getting. It will be far better than you who don't have knowledge, who just open trade based on emotion or based on what you just feel is going to be okay, and you did it at the wrong timing. And this person who just newly joined with being on profit, immediately price start going towards the upside. And you who joined who did not even smell maybe 2 cent or 20 cent profit, you are out with frustration. So you can see that no matter how or no matter which strategy you are using, you definitely need to understand this concept called market structure. Otherwise, it will be very, very difficult for you to be a profitable trader in the forex market. Exactly. So this takes us to the second BOS, which is the reversal BOS. Exactly. Which is the reversal BOS. When I say reversal BOS, I'm talking about BOS that gives you information that the current trend is about to what? Change. Because price can't be buying all the time and price can't be selling all the time. There are time price is definitely going to what? Switch from buying to selling. Why? Not every day the buyers are always active. There are days where the sellers will be more active than the buyers. So whenever you are noticing a buy in the market, it is telling you that buyers are the one pumping money into the market. So sellers were not around at that point. Probably they have where they are waiting for to take over the market too. There's a limit they are expecting price to get to before they start reacting to price movement. So reversal is the same reversal case when price is going towards the downside, right? When price the sellers are in charge pushing price towards the downside, they can't push price every single day. There will be a time the buyers will be forced to come in with full force and then they will take the price back to some extent or some level. So this is how it is being done, and you can only understand that when you can only be profitable following all these things when you understand market structure. You can buy a strategy for 100 million. Once you, as a person who bought that strategy, don't understand basic concepts like market structure and other little concepts, then the 1 million cost you have paid for will be look it will more or less like it's useless, right? So that is why You need to understand this concept called market structure, and then whichever strategy you are bringing in, it is just an addition to the foundation, because the main foundation is understanding market structure. Exactly. So now let's talk more about the reversal trend BOS. The reversal trend BOS, a break of structure can signify major shift in price momentum and price movement, often leading to a change in the existing trend. This happens when the price breaks through critical support or resistance level, suggesting the potential for a trend reversal. Now, initially, when we're in the continual trend, what we keep seeing is price going up, price breaking highs in the bullish trend. Price gives you an impulsive move. Sorry, price gives you an impulsive move towards the upside, makes a pullback, right? Makes another pullback. Price keeps giving you all this kind of bullish move towards the upside, right? Now, price will never continue like this forever. So that is why we have to also talk about the reversal. So when price is giving you a move like this, right? Because in an uptrend, the higher highs are not respected, but the higher lows are respected. Why did I say the higher highs are not respected? You always notice that when price make pullback, it usually come to take out the previous high. This was in a point in time, this was a high. Immediately price make a pullback, it did what? Took out this high, right? Created another new high, made a pullback, take that out, but failing to take out this low, that means breaking below it. So in a bullish trend, the lower highs tend to be more stronger, while the higher highs are weak, because price keeps breaking the higher highs and the lower highs are not being broken. Now, in a reversal trend, the first signal that is going to give you that mindset or that alert that, hey trader, price is about to change direction, that means from bullish to bearish, is the what? Is the break of the lower high. Immediately we will notice price coming down and taking out this lower high, which gave us the last high of the price or movement. Price breaking below it. Now this is a signal of exit, telling you, hey, it is time to exit this trade, because initially you are on buy. Let's say from this point price gave this reversal, you're able to take your buy from here using your trend line as we did initially, right? As you have placed your trend line, you place your trend line. Okay, place your trend line. Sorry, it's not connecting because I did a short term distance too. Immediately price breaks below that previous lower high, which gave you the lie of market, then definitely it is sending you a signal that you should what? Get ready, that the trend is about to change. As a smart trader, it is better to quickly exit the market. Now, if you don't understand market structure, this is where some of you keep holding trade, and at the end of the day, you drain your account to zero. You have been making profit, but based on your emotion, maybe it want to pull back, it will still go up, it will still go up. You know, when you that time you normally trade those kind of trade, yeah, you're on profit, all of a sudden you started noticing your profit is dropping. Something keeps telling you don't close, you are going the market will definitely go back. Your emotion is telling you don't worry, everything is okay, don't go out. Then that is how you're going to hold the trade, and at the end of the day, you go back to zero, and price will nearly go back to, in fact, closing down your account, because instead of immediately you got this signal that price has broken the last higher low, which gave lower high, which gave us the last high of the market. It is a signal that there's a possibility of trend reversal. So, as a smart trader, what you should do at that moment is to exit the trade, is to take off. That means you should leave the market. Is that clear? But if you don't understand, you end up being a victim. So, immediately we notice this kind of move, then we expect price to what? Change totally. Now, that doesn't give you full assurance to quickly uh start placing sell immediately. No. When price breaks your previous lower high in an uptrend, which tend to be a reversal or trend reversal, what you should do to confirm that indeed price is definitely going to reverse, the first sign is that if price should make a pullback, right? Probably price make the pullback like it used to do before. The first signal is that price won't be able to break above this high. That is the first signal. Immediately you cite that signal that okay, this price made pullback, it couldn't break above this high. The next thing you should be expecting, since price can't break above this high, immediately price breaks below this current low, which is this point here, then this is a clear confirmation that we are no longer in bullish. Then you now start waiting for price to give you an opportunity for you to take what? An entry. Then you can employ your trend line. For those of you who are a trend line trader, immediately price comes back and then drops again, because some people like to see two confirmation before they place their trend line, just for them to have a connected point. Now they will connect their trend line saying, okay, since price has changed character at first, made pullback, couldn't break above the last high, then definitely price is definitely start to go down. So they will now wait for price to mitigate or touch their trend line for the third time, then they place their entry, and then you see this price going towards the downside. You can see that from that bullish trend which they have exited from, they are also been able to take entry for a downtrend, telling them okay, price is no longer going up, price is going down. So you can see when you put all this uh information together, when you approach the forex market, synthetic market, the crypto market, you won't be finding yourself uh doing the wrong thing, because already you have that mindset, you understand what market structure is. You can easily tell when price is making pullback, you can easily tell when price is going to continue the trend, and you can easily tell when the trend is changing either from bearish to bullish or from bullish to bearish, whichever case it may be. So you can see that at this point, market structure is not a concept that you should do away with if you must be profitable in the market, in the forex market. This is one of the major concepts which every trader out there must have in-depth knowledge about. So this is another example of what a trend reversal is. In a trend reversal, price to, price tend to change from the previous direction to a new trend direction. You know, in a continuation, price doesn't change. If you're having a BOS towards the upside, the BOS remain. But in a reversal, in the case of reversal, you'll be expecting price to give you an alternative trend. That means if price is bullish, you will be what you see next is an opposite trend rather not an alternative. It's you get an opposite. Then if price is bullish, bearish, the opposite is you start seeing price uh, bullish. So in this case, price was busy giving us higher high, which is prior the buyers are pushing the price high. But immediately price went up and gave us this last high right here and came down and break below the previous higher low. Then it is a change of character. It is a signal, not a confirmation. Exactly. It's just a signal, not a confirmation yet. It only becomes a confirmation when the pullback, which is this leg, couldn't break above the previous high, and then price came and took out the current low, which is here. So immediately this low is broken, then it is now certified that price has changed direction totally. But the initial break of the low of the previous high is not yet a confirmation yet. It can come that way and then later continue upside. In the market and in the forex market, there is a situation for that, which we'll be discussing next time. But currently, before it becomes a confirmation, the pullback must not break the previous high, rather let it break below the previous low. So that makes it a confirmation. And this is when you can now connect your two dots together for the trend, right? And then you are expecting now for price to do what? Give you that move towards there. Take your entry, your stop loss at the previous swing high, which is this point. Then you see price going down. And if it is in a bullish scenario, you do the same thing also. Exactly. In a bullish scenario, this is what normally happens. Price that was dropping from the upside, right, giving you pullback, break structure, give you pullback, break structure, give you pullback, break structure towards the downside. Now, this was the highest point that gave us the low of the market, right? If we should be following, if we should do a break of structure properly. So that was the high that gave us the last low. Now, when price tend to come from the lower part now, where you're expecting pullback, but not just pullback alone, it came and broke above this last high that gave us the low, then it is an indication that there's a change of character, but not yet a confirmation for you to take your entry. Before it becomes a confirmation, we want to see a pullback that will not break this low, right? Rather break the high, something like this. Then when you have a move like this, it now becomes a confirmation. So as a trader, you can put your trend line all the way up. So next thing you're expecting, when price should come back to that gauge which you have set, you place your buy and your stop loss will be around this swing low. So what you expect to see next is price to drive all the way up. So you can see that both the trend continuation and both the trend reversal, it is very easy. All you just need to do is settle down and understand market structure, because this is the first thing you need to understand. Then any strategy you are now building on this will become solid. It's just you adding one conference to the other to make decision. Is that clear? So if you are still new to the trading platform and you are still finding yourself not making profit, if it is not as a result of greed, then it means you are yet to understand the basic concept in the trading market. Otherwise, there is no taboo for every trader to be profitable. It's just that some are not making profit based on their emotional psychology factor, either emotion, another one. Then the most of it all is not even having the knowledge of what price is doing on your chart. That is the most difficult thing. So if you are going to be profitable or you want to be profitable, you can't do away with this concept because they are the foundation of forex trading. So I think that being said, we have been able to identify a trend reversal and a trend continuation BOS. So with this, it will help you as a new trader in your decision making. Is that clear? So these are other examples from charts which symbolize the change in structure. You can note that at some point we are having break of structure towards the upside, right? Now this was the low that gave us the last high of the market. Immediately price took it out, then it's a signal that the trend has changed character from bullish to bearish, but not a confirmation or a criteria for you to start placing a sell order. No, we want to see a pullback which is not going to take this high out. And when we have that pullback and you couldn't take this high out, rather you take out or make another low, then we say automatically it is now fully confirmed that price is going towards the downside. This is when you start bringing your strategy into the market for possible entry, either to follow the price and the trend all the way down, or if it is going up, to follow the trend all the way up. So is that clear, guys? Please make sure you don't skip this video, and if you have watched to this point and you have not subscribed to it, deem it free to hit the subscribe button, and then if the video is making sense, kindly give it a like. So this other part is on a bearish scenario where price has been dropping from the upside, creating BOS towards the downside, right? This was in a continuation phase before, but price after breaking, price now went and took the high, which gave us the last low of the market. This was the high that gave us the last low of the market. You can see price coming back close fully above it, giving you a kind of signal that hey, price is changing character from bearish to bullish. So if you are in the market before or you have open position, it will be safe for you to close that position immediately while you take another decision to make an entry towards the direction where the trend is going. So your first confirmation is the pullback must not break this low. You probably can pull back to some level like this. It must not break this low, rather it should break above the previous high, making it to create higher high. And at this point we have a break of structure. So this is where you start connecting your dots from point A to point B, right? And when price get to your area of interest, you shoot your shot by or taking your entry. Your stop loss should be at the swing high or swing low of that trade of the previous trade. Then you can now ride it all the way to where price is going to, or probably if you have your daily target Once you meet the target, you are out of that trade. So this is the kind of approach you should be using when you are trading the forex market, not depending solemnly on your mobile indicator or the um depending on signals. Let me just put it that way. So for you to be a profitable trader, you yourself must understand what the price is doing, and then you should be able to make good decision for yourself. So by so doing, then the trading becomes more easy. Now, understanding BOS trade in trading, from these two interpretation, BOS can represent either trend continuation or trend reversal. To put it into context, BOS occurs when the price breaks a previous high or a previous low in a continuation trend, while shift from bullish to bearish or vice versa, making a change in the trend. So you can see that if you want to understand your trend, the first thing you should understand is the structure. So that one that some of you will go to the chart, you'll be drawing trend line from point A and point B. You can't easily even identify it. Immediately you see uh you are able to identify your structure, you can easily tell, okay, this price is no longer bullish, it's now what? Bearish. Or this price is no longer bearish, it is now bullish. So it will be very easy for you. There are some people who don't even draw trend lines on their chart, and they can easily, once they open their chart, they can tell you, oh, in the 4 hour price is bullish, in the 1 hour price is bearish, in the 15 minute, it's just because they can easily see the structure within a second. They can easily see where what price is doing. Exactly. Now, proceeding further, the key factor to consider for a break of structure to be a valid one, the price must close beyond the key level with a body what closure. A week alone is insufficient to confirm the break. So in addition, what this part is saying is that if there's going to be a break of structure, just like what we have here, price breaking above this previous high or swing high, this one, the reason why they say no break of structure is because it didn't close with full body, it was a week. What this symbolizes that buyers try to push price all the way to this point here, right? They push the price up to that level. The next thing, sellers begin to push the price, and the price ended up closing below the previous what? The previous high with a wick. So it is a no good confirmation for break of structure. So if you are using some tools, the tools will still tell you it's a break of structure. But this is why you need to learn, and at the same time, when you are using your tools, you don't just assume based on the information the tool is giving you. You just need to check what the tool has marked. Is it correct? If it is correct, you don't need anyone to tell you. If it is not correct, you don't also need anyone to tell you. So, but in this case, you can see there was a break of structure towards the upside, but the candle that led to that break of structure didn't close with wicks like the previous one. Rather, it closed with a full body, so indicating that there was a huge momentum for buyers to push price all the way up. So, at this point, I believe you can now see why you need to understand market structure, understand the different type of BOS we have, because with the help of this different type of BOS, you can easily identify if the trend is in a continual trend, then you can then make a way to take entry, and if it is in a reversal trend, you can also make a way to make entry. Then if the price is in a continual trend and you have do some analysis, the point you are expecting price to get to, price already gets into that area. So there is possibility that price will change and reverse. You see, at this point, you won't want to what follow the trend anymore. You'll be waiting for a signal for reversal and a confirmation before you join. You can see that you with even market structure alone, you'll be able to make decision without any doubt in your mind. But when you don't have this in-depth knowledge about market structure, this is where you now find it difficult. This is where some of you will go to 1 minute time frame, you'll be making trades, whereas what you are doing on that 1 minute time frame is totally what? Rubbish. Because what the 1 minute is giving you is not what the 4 hours is giving you. And you can't compare the market structure of the 4 hours to that of 1 minute. So this is where most of you are missing it. That is why it now looks like forex market is not something you can do. It is something you can do, but you have to sit down, have adequate information to approach the market, so that when you get into the market, you don't get beaten. Exactly. That means you don't end up losing. Even though you ended up losing a cent, you should be able to tell why you lost a cent. Because when you understand market structure and other concepts in trading, you can easily tell, okay, this is where the error is coming from. You don't even need somebody to tell you, okay, why. Or immediately the error happened, okay, I never took note of this point. This is why I lose this trade. So next time you avoid that error. And next time, where that same error that made you lose, you definitely use it to win next time. So this is why you really, really need to sit down and focus on this concept, master it very well. Then whichever strategy you are using, add it to the strategy, and you see gradually you are now becoming profitable. Exactly, guys. So we are getting to round up soon because this video is not supposed to be that long, but it's worth it anyway. By keeping this principle in mind, BOS becomes a versatile tool for identifying both ongoing trend and potential reversal. You can see now that with this information alone, you can tell if this trend is going to continue or if this trend is going to reverse. And if this trend is going to reverse, what you should do next, you have already prepared because you are just waiting for a confirmation from the price or the trend to tell you, okay, we are going down. And when it gives you the necessary information, even if you are going to lose in these cases, you notice that your losses won't be like when you don't understand the structure initially. Somebody who lost $50, $100 must be as a result of him not understanding market structure. So immediately he understand market structure, what collected or what warranted him to lose $50 may not even take up to $1 from him anymore. So that is the main reason why you need to sit down as a new trader and digest this information. And probably if you are still having problem or you are not clear with it, all you just need is a mentorship. Is that clear? That is why I said in the beginning of this video, you can check either the description or at the beginning where I put my WhatsApp number. You can chat me for mentorship so that you tell me your areas or the problem you're having before now. Then I can assist you by joining you, doing the necessary thing for you, teaching you all the procedures, and giving you all the necessary tools if possible. Is that clear? So that being said, let's get to the chat so that it doesn't look like we only read the textbook. We didn't see any kind of search in the chat. So let's get to the chat and let's discuss and see if all these things we talked about so far are like that in the real market. Okay, this is a boom 500. Currently, this is on boom 500. So on boom 500, what you can see, this is on the 4-hour time frame, right? This is on the 4-hour time frame. Now, if you are a trader, you don't even need deep explanation like for what we have been saying initially. Let me just give you an example, a quick one. Now let's start from this point. Yeah, this point here. Let me give you clear. From here, price was what? Breaking down or coming down, right? And this was the last point price got to. So this was where price broke structure, right? This was where price broke structure towards the downside. If that is the case, how do we mark our structure? This was the high. This was the high, right? If you understand your structure very well, BOS towards the downside. Because price got to this point and made the reversal. This is a pullback. These two bullish candle you are seeing here is a pullback. So immediately price made a pullback. What happened next? Price break below this point and what came down. Can you see it? Because at this point we have a BOS, a mini BOS there. But after that, what happened next? We notice that price came. Since this is the highest point, let's mark this. Since this was the highest point, right? That gave us the last low of the market. Price came up and closed with a full candle above that place. So it means automatically price was breaking the structure, making us to what have this one is a confirmation that trend has changed from bearish to bullish. This is the first confirmation in this case that price is no longer down, price is bullish, but this is not enough for you as a trader to do what? To quickly start buying, right? So what happened next? We noticed that price made a pullback. This was a pullback. this was a pullback. After price broke structure here, we have a BOS here. Price made a pullback, right? And this pullback could not break above below this previous low. Rather, it took out this point again. What do you notice? Price went up, breaking structure again, right? So this is when it is now fully confirmed that what we are bullish. So for those of you who love trading with the trend line, this is when you now plot your trend line, connecting the dots all the way up, right? Like this. Now, immediately this price make this third pull back at this point, you will take your what? Entry. When you buy, what do you notice? Price break structure again towards the upside. Can you see it now? Price break structure towards the upside till it get to this current high as at this point here. As at this point, this is where price got to the this current point. So you can be able to see that price was making buy move all the way to the upside. We are having BOS. The first BOS was here. The first BOS was here, which initiates a kind of alert that if we are selling, we should close our sell. Then we expected a confirmation. The confirmation is that the pullback should not take out the what? The low. So, and indeed the pullback didn't take out the low. What do we notice again was another break of structure, which is this one. So this is when you plot, you must have two dots connected together using your trend line. This was the third reversal. Immediately it's coming down to that point, then you do what? Place your entry, and indeed got another BOS here, which took us all the way to the upside, telling us that okay, price is now totally what? Bullish. So you must have bought up to this point. Now immediately you notice price closing below. In fact, we later have some pullback which are minor, but if it is in the lower time frame, we have seen it, which are minor. We have noticed them there because there was a kind of a little pullback at this point. So immediately price breaks below this point here, we already know that the trend is what? Is signaling an alert that we should what? Leave the trade immediately. We should leave the trade immediately, that it's no longer what? Buying. It is now what? Selling. So price started dropping all the way down again, right? Now, when it make the reversal, it couldn't come to this point to remove the high, right? It couldn't come to that point to remove the high. So we are expecting price now to take out this low. This first reversal here, right, did not take this high. So what we are just expecting is for it to come and take this low for us to make a decision again. But till date, price did not take out this low. It was more or less like price was ranging within this range, within this time. The only time price now take out this high was here, right? You can see this was when price took out that high. But if you have gone to lower time frame, probably you must have gotten some kind of uh privilege opportunities for either this down move or this up move. But on this 4 hour time frame, this is only the point where price came and took out what? That high. So probably what we are having now might just be a little pullback for price to continue towards the upside. So you can see that you really need market structure for you to be successful in the forex market. Otherwise, when you open your chart every day, it will just look like an illusion to you. It will look like you will not be able to predict or tell what is going on. But don't worry, if you join the mentorship class, there are materials that is going to make things more easier for you. So all these things I'm telling you now, materials are available to make it more easier for you to understand. But using those material is not what will I say? Those material are only just to guide you or to quickly assess areas where we have the break of structures or any other patterns. So yours is this information I'm giving you now is now for you to now use your insight to see what those points, those softwares have marked, if they are accurate enough. If they are not accurate enough, with the help of this information, you can now adjust all those things. So with that, you now see yourself making profit, because we are not trading anyhow. We are still using the market. We are still working on price action. We are still doing what? Working on price action. So that is that on this structure. So I will stop here. Please, if you find this teaching very important or very meaningful, kindly give me a thumbs up, like this video, and you can share it with friends. And then if you want a guide, mentorship, then don't hesitate to check the description below. There's my WhatsApp number there. You can communicate with me. and then we continue from that aspect. Thanks for watching. See you in the next one.